I kind of went over what Forex is, you know, but I want to go over what my particular strategy within this market is. Obviously, this is not going to be filled with all the little tiny things that I do, but I kind of want to explain some very high level things to you. I trade on a concept what we call smart money, right? In the market, there are two types of traders. There are the retail traders, and then there are the smart money traders. The retail traders are the people who are trading, Forex shapes and patterns, trend lines, resistance, double bottoms, flags, pennants, things of that nature, right? But with smart money, we trade with the banks, and I'm about to explain something that may blow your mind. Think about price. Like, think about how price moves. How does price really even move, right? A lot of people think that it's IPOs, it's earnings per share, it's interest rates, it's fundamentals, right? A lot of inflation, things of that number. People believe that when economic news is released, things like that impacts price. Like majestically, price moves because of economic news. But have you ever, if you're a scalp trader, you'll notice that sometimes, even though news is good, price actually goes the opposite direction, right? And people may argue that it's because price maybe did not as good as they wanted it to, but sometimes price just moves in a direction that just doesn't make any sense, even if you account for that, right? Sometimes price just moves in a way that it's unpredictable, and you thought everything you did right. You predicted all the shapes, right? You used the Fibonacci level retracement. You use support, resistance lines, trend lines, everything that they've taught you, right? Everything, all this information that's on the internet for free, right? You utilize all that to try and predict the charts, right? And see where price is going to go. Yet, you figure that you just aren't getting it. You're just not being profitable, right? In the market, about 70% of traders in the Forex market are unprofitable. That is a statistic. 30% only are profitable. And I'm about to break this down to you in a way that will blow your mind. So, if price is not moved by news, if it's not moved by, fundamental stuff, what is it really moved by? When does price ever really move? Price is only moved by supply and demand. It's only moved by people who have money to purchase or sell off a particular asset or commodity or currency or stock, right? A particular asset to change the price, right? Price will change. So if I buy so many, iPhones, let's say I buy like 100,000 iPhones, the price of an iPhone is probably going to go up because the demand for an iPhone is high. Just like in economics, higher demand, higher price. If I sell, a million iPhones in the market, it may go down the price because nobody, say if I'm trying to get rid of so many iPhones, I'm gonna have to sell them at a cheaper price so that I can get a lot of people to buy it, right? So that's why price goes down. Price is only moved by supply and demand, right? The more people want of something, the more expensive it is. The less people want of something, right, the less expensive it is, right? Price goes up and down because of supply and demand, not because of news. Now, what happens is that news may indirectly impact it, right? So let's say, a company has a good earnings per share, or, an economy has a good GDP report, and so their currency goes up or appreciates, right? It's because people are buying more of that particular currency, right? People are buying more of that particular currency, and people are buying more of that currency, and so the price of that currency goes up. People are buying more of the currency so that they can invest in assets that are in that particular economy that is doing very well, right? Or if an economy did bad, people who may own assets in that economy may sell off those assets, and so they're exchanging what was that economy's currency back to their own home currency, because they're like, I don't want to invest in New Zealand anymore. I'm gonna, all my New Zealand dollar investments, I'm gonna pull them out and exchange them back into US dollars and just buy some US dollar stocks, buy some US stocks like Apple, right? So, price is really moved by people who have the money to move. And so think about it. If price is not moved by news, really, because think about it also, if price was only moved by news and fundamentals, then like, why does price move when news is not released? Price still moves whether or not news is released or not. And price may move significantly. You'll see sometimes a currency may jump up and you'd be like, that happened for no damn reason. Nothing came out, nothing crazy happened. It just moved so crazily, right? Price is moved by people who have the money to move it, people who have enough to buy it, to move it in a particular direction, or people who have enough to sell it off so it can move in a particular direction. A great example is George Soros, right? Who sold off $1 billion worth of pounds, I believe, £1 billion, I believe, and like basically destroyed the British economy for like 24 hours, right? That's how the story goes. So that's an example of how price is moved by, that's just one guy with $1 billion. Price can move significantly once they have enough money to move the price. And so if you can move price, if you have enough money, and we know that this is a capitalist world, people just want to make more money, wouldn't there be an incentive to manipulate the market in a way that will make those people profitable? Right? I'm pretty sure there would be. Now, stick with me for a second, right? Now, just keep that in your head. Let's see who are the biggest players, in the Forex market. Let's see if it lines up with what I just said, right? People who have a lot of money. Who are the biggest players in the Forex market? Look at this. On Wikipedia, the foreign exchange market, right? As of June 2019, the top 10 currency traders in the world, in the Forex market: JP Morgan, Deutsche Bank, Citibank, HSBC, Bank of America, Goldman Sachs. What do all these places have in common? They're all big banks. JP Morgan has around $2 trillion, $3 trillion of assets. Citibank has around the same. Go and check these numbers. They have all these banks combined have trillions, if not tens of trillions of dollars, right, in the market. And they are trading Forex. Compare that with your $1,000 account, $500 account. These people have billions of dollars in trades alone. One trade can be $52 billion. One trade can be $60 billion, right? Maybe like 100,000 K size lot. You're using a 1.0. and that's over leveraging your account. That's too much for you, right? These people are using 100,000 lot sizes, right? These people have enough money in the market to be able to move price any way they want, and they can manipulate it in a way that makes them profitable. Now, the question is, how do they do that? Now, stay with me. If you go back to that, go on Google Images, right? Forex patterns and strategies, right? Actually, you know what? I'll pause the video here. Maybe I'll pause the video here. It's a lot of information for you to take in. I'll do a part 2. Like I always say, please look down into the description below. Look into the comment section below. For some courses on some basic levels training from Forex all the way to the intermediate level. Whether it be through the IML platform or my own personal course, up to you. As well as if you would like to talk to me, leave your email down in the comment section. We can go over how we can get you set up on how to start trading and things like that. But yeah, I will be doing a part 2 because I've got a lot of stuff. I got a lot of stuff to share with you guys.